on TikToker, which is the best place to actually be. And for those of you who have not met me, I'm a former member of the Chicago Board of Trade. I've been in business now for about 25 years. And I started out in the pits, actually traded in the 30-year bond pits at Chicago Board of Trade. And after about 15 years, transitioned to online trading, which I am now. During that time, I've traded pretty much everything from bonds to S&Ps to metals. And most recently, the last 10 years, I've kind of specialized in Forex. I've come to like that market a lot. Last week, just a note here, last week I did a show called Becoming a Trader, an at-home trader in the new normal. And it was mostly designed for people who are not in the business, who are not traders, but would like to think about it because of the new normal, where people are looking for occupations at home. And I did about a half-hour show here on TikToker, and you can find that on YouTube under Jeff Wecker. That might be something really useful if you have any friends or a partner, spouse, etc., who is thinking about getting into the business, would like to be an at-home trader. That would be a great video to point them to, and pretty much tells them everything they have to do to get into the business, how to start, and where to start. Today, it's kind of an interesting day in the market, and I want to talk to you about some of the interesting pair trades that took place. And you're going to see that most of these trades, in fact, all of them, have a lot to do with what I teach in my personal coaching course and how I personally trade myself. And that kind of focuses on, to me, the most important things about trading are risk control and its sister, which is where do you get into the market? They go together. Getting into the market, the point you get in is absolutely critical if you're going to be successful. And only being able to get in at the right spot are you able to minimize risk control and take the trades that are going to have the best risk reward. So to see what I'm talking about, let's take a look at some of today's action. This is a chart of Euro-Canadian dollar, the 1 hour. Now you look at all this sideways noise that went on for several days. This is not where you want to trade, okay? All that's happening in this sideways motion is the market taking out stops. They run it up, people get long, they run it down, take out all the stops, run it up again, get them long again, even make a little new high here, then boom, crash, take them out. So all that's going on in these sideways movements is taking out the weak players, and you just don't want to be part of that. On this chart, in my mind, there was only one place to get into a trade today, and that was right over here. A couple of interesting things happened for me to get interested in this trade. First of all, down at the bottom, we have these momentum indicators, right? And we can see as price was going higher here, the indicators were not bearing that out. They were saying, okay, price is going higher, but we're losing momentum in the buying. So that's your first warning that we're going to have a change of direction. A second thing that happened, these dots represent the parabolic SARs, which also indicate a change of direction. You can read about the math behind that if you want. You can find that on the internet. But the essence for me is that when the dots shift from going up to going down, that's another indicator that we're going to have a change of direction, along with the fact that it was running over, the momentum was running out of gas. So that's my warning. That's where I got my first warning up here, but I didn't do anything here because if I start selling it around here, what am I going to risk? I'm going to be risking 50, 100, 150 pips. I don't trade that way. So the next thing I waited for was the pattern to develop. And in this case, the pattern is very nice head and shoulders. Here's your left shoulder here, here's your head, here's your right shoulder, and you draw a neckline. The important thing about the neckline is that it connects 4 spots, 4 points, 2 on the left shoulder, 2 on the right. In this case, it's a beautifully symmetrical head and shoulders. They don't all look that pretty. Some of them slope upwards, some of them slope downwards. Some have big left shoulders or big right shoulders, but this is about as perfect as it gets. And so this trade was about as easy as it gets. So I waited for the pattern to develop. I drew my neckline, and when it came below the neckline is where I got short, right here. Now my stop is at the neckline, so when it went back above here, it took me out. I got stopped out up here. But I got out quickly just as soon as it went on the other side of the neckline. So I was taking a 5 or 8 pip loss. I was not going to hold it in case it goes up 20, 30, 40, 50 more pips here. So I get out of it here, and then it comes below the neckline again. I get short again, and I get handsomely rewarded. I pretty much know how far the trade is going to go because on the head and shoulders, it's a simple measurement from the top of the head to the neckline and just extend it the same distance down. And that's about where we went. So I knew the trade was probably close to an end there, and I took profits right down here at that measurement. So this is a good indication. This is kind of a perfect indication of why I say there was only one trade on this whole chart, okay? If I did not touch this market going back to June 19th until today at June 30th. So for 11 days, I didn't even trade it. I was waiting for this setup. I got it, got rewarded. And it shows you what patience can do for you, okay? Because this, as I said, right over here was the only place on the chart where I could draw a line and risk that line. So I have a very small risk, okay, for potentially big reward. Let's look at a couple of other trades today that I think pound dollar was interesting. I caught that also. Here's the pound dollar 15-minute chart. And here's today's action right here. Let me show you how I traded it. First of all, prices were coming down here, making new lows, new low here, no low here. The momentum indicators were saying, no, we're not making new lows. We're running out of gas. We're going to be turning around and going up. So that was my first warning that these lows were false over here. The next thing is the dots flipped on the parabolic from going down to going up. Second sign that it's going up. The final thing was the pattern that I talked about before, and this is another head and shoulders. Here's your left shoulder here. This is your head. This is your right shoulder. Here's your neckline. I drew it in. And where do you think I bought it? Right here. Coming through the neckline, came back below, stopped me out. It came back above. I got long again, and bingo. What a nice trade that was. Let's see, from 122.86 to 123.89, over 100 pips. And very quickly, no retracements, almost nothing, almost straight up like a rocket. So again, you can see the consistency of my trade, and I always do it the same way. Patterns, there can be differences. The patterns may be different, the head and shoulders. Sometimes it could be a triangle, sometimes it could be a rectangle, sometimes it could just be a trend line, but it's going to be some kind of line that gives me an exact price above which I want to be long, below which I want to be short. Let's look at a couple of others that happened today. I think Australian dollar was another one. I mean, obviously this was a continuation. The whole thing was just a continuation of the dollar weakness that we've been seeing now for many weeks. Everybody thinks was looking for an end to the dollar weakness. It's not happening, and a lot of people are subsequently trying to sell the dollar, actually buy the dollar, looking for reversal, but it's not happening. At least not now. These trends in the market tend to go on for a much longer time than you think. And I know a lot of people last couple of weeks have been trying to buy the dollar, and that was to their detriment. So the trend continues towards a weaker dollar, and doesn't pay for you to fight that until you see some definite signs that it's turning around, like in certain momentum indicators would show that to you. So here's Australian dollar. That was another, like I said, they almost all worked the same way today because it was the weak dollar scenario. This Australian dollar had a head and shoulders bottom, left shoulder, head, right shoulder, joined my neckline. My buy price was right here. And in this case, it never came back below the line to stop me out. It just was straight up. I did my measurement, which measured up to here somewhere. So I started taking profits in here. So that was also a pretty nice trade, from 68.51 to 69.02, about 52 pips. Another reason I would get out of this trade up here, besides the fact that it reached its head and shoulders measurement, two things. One, you can start to see divergence over here. You see where price made a new high here, but the momentum index did not. And just like it's at the bottoms, it also tells you at the top, okay, price is going higher, but momentum's running out of gas, so you don't want to be in this anymore. The second thing was this long wick. As you know, these are Japanese candlesticks. And the wicks tell you, the high and the low of the day, the body is the action during the day. But when you see a long wick like this, what do you think's happening there? What's happening is a lot of people saw this spike and decided to sell it, start selling it around here. Actually, I was taking profits around here, so I was in effect a seller. But a lot of people thought, okay, it runs over, let's catch the upcoming break, which did happen. It happened to be this right here. But here's the thing, before we start down, this wick indicates that the market shot straight up, took out all their stops, all the people that sold it here. And they would run that up as far as they have to get almost all the stops, no matter how far away they are. So when I see a wick like that, that tells me, the market's about to change direction as they're taking out all the stops of people who try to sell it, and boom, it takes the shot down. But all those people who sold it, they not only missed the move, but they lost money as well. I think we have time maybe for one or two more. Let's look at USD CAD. And again, this is the same story, dollar weakness. Okay, this is beautiful right here. This is today's action over here. Same story. Prices going up, the index saying, no, we're not going up anymore. We've run out of gas. The dots flip from going up to going down. Beautiful head and shoulders formation this time, just absolutely symmetrical. Again, they don't always look so pretty because they can be hard to see when there's a very high left shoulder and a very tiny right shoulder if they slope one direction or the other. So I was finally able to draw my line in to connect all 4 points, and I sold it coming through the line. It never went back above the line again, so this is a great trade straight down. And I didn't catch all of it. I did my measurements and started to take profits around here. But nevertheless, it was still a really good trade. This is an example of how markets often go further than you expect. It's just something to be aware of. You can do a head and shoulders measurement, which might have measured to here where I took some profits, but you don't have to take all the profits in that case. If understanding markets always overdo it. So it might have been better for me today. I should have taken maybe 70% profit right here at my measurement, and then hung on for for another 30, 40 pips and picked up the rest down here, and I would have got out on the change in momentum. So this, I hope this lesson was useful to you and shows the importance of maintaining very low risk, total risk control, and being patient, waiting for the setup, and then going with the trade. Those of you who would like to learn how to do this, there's obviously a little more to it than I've shown today, but I teach that in my personal coaching course. And you could email me if you want at jwecker4@gmail.com or here on TikTok or to ask questions about the personal coaching course, and you'll learn how to do that yourself. With that, thank you for stopping by at Wecker's Weekly, and looking forward to seeing you next week, same time, same place. Have a great week.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
Who's this? Anonymous 666.
Find me the most famous trader there is.
Top of the morning to you.
Who is this?
Ben Arnold.
Hip,
Hip, hip.
I'm telling you, Helen, all that. Oh, buy the British pound.
By the British pound?
Oh, by Jove.
What is happening?
All I require is a lump sum payment of £6,000, give or take. Preferably give.
Avoid those traders with Ticker Talker,
the world's first social trading marketplace of trusted traders. Leaders have verified results and offer ideas, automated strategies, education, and even go live inside trading chat rooms.
There, isn't that easy?
For Queen and Country!
Trade live with a Ticker Talker trusted trading leader today.
So lately I've been doing a lot of videos talking about futures, and nobody knows the futures market better than Steve here. So let's kind of get some answers from somebody who's been trading futures for what?
About a decade.
About a decade. Okay. Hey, he might look older, but he's not that old. Let's just talk about futures, all right? What's the basic idea of a futures contract? The idea of buying and selling is just like buying and selling a stock.
Right. So, but before I get into that, I'll tell you right now, a good friend of mine used to trade the big S&P futures back in the mid 90s. And if there's one, not a regret, but I wish I would have traded futures a lot sooner than I did, because it really is a phenomenal vehicle to trade. But going into what you're saying, when anybody who approaches me says, oh my God, a futures contract, I look at them and say, you're overthinking it, right? It's no different than trading a stock. If it goes up, you make money. If it goes down and you're long and you own it, it's the same thing. So whether you're trading a stock, an ETF, or a foreign exchange, people get all wigged out a lot of times, but they shouldn't. Don't overthink it, So you're betting on a price that you're buying something at for the future, right? So basically, why I've seen an explosion in futures contract is because a lot of people don't have $25,000 that they trade equities, right? So a lot of firms allow a $500 margin per futures contract. So if you have $3,000, $5,000, you can start understanding how to trade futures. Basically, a futures contract is just, again, like I said, if you're looking at an index like the S&P 500, right? So if you're going to buy one contract and you buy it at 94 and it goes to 96, you say you made 2 points or 2 handles, right? So you're making money based upon the fact that you're buying it low and you're selling it at a higher price. Nobody should overthink trading futures. It's actually if I had to do it all over again, I would have loved to have started trading futures versus trading equities. But again, no regrets. But anybody who's just getting into it should not have any fear of trading futures.
I like you talked about, the idea that you're going to get in, you can make money, you lose money. But the one thing that I've noticed recently, is trading futures personally, is that I feel more confident in the idea that if I get into it and I'm like, mentally, I'm like, okay, I'm going to risk $200
Mhm.
and it hits my stop area, I'm going to basically get filled at that stop area.
Well, it depends on a fast market.
Yeah, but I mean, I'm trading small size, I'm trading 5 lots.
So
in a normal market situation, in a normal operating market, I'm going to get filled at that stop area. Where
right,
when I'm trading, really volatile stocks, like in low flow stocks,
right.
I might put a stop there and never get filled.
The index futures are very, very liquid, right?
Yeah.
So look at you, right? We've known each other a few months now, and I started to talk about futures with you, and you jumped right in. I did a couple go to meetings with you.
Yeah.
I taught you a little bit here or there. You see the results that you're, making $200, $300, $400 a day, right, per se. So the point of the matter is, you weren't fearful. You were able to, not overthink it. There's nothing to really overthink. I could say, let's go trade water. Is that going to make you better because you understand what water is? It doesn't make a difference. If you buy it and it goes up, you're going to make money if you sell it. If you buy it and it goes down, and you lose money.
So you're telling me that the idea of buying low, selling high works just the same with futures?
Yeah, I mean, it's basically, what I've done here is built algorithms that give me the ability to see trends and or reversals developing before my eyes, and to be able to identify the patterns that come with those trends or reversals. So this is what I do all day long. I'm not just going to buy something. I wait patiently. And again, it goes back to the 5 keywords that I told you last time. Consistency is the number one aspect of trading. Then you got discipline, because you got to be disciplined. Money management. So you got to use your stops. There's no averaging down and then then you could be wiped out in a day. And then confidence, right? There's confidence here because I built something. I've been trading for 36 years. I wait, which gives me to the 4th word, patience. I'm patient upon waiting for the patterns to set up. And then obviously the 5th is, I have a passion for this. I love this. I do this all day long, and I love coming into my room and standing here 8 hours a day, and it doesn't even bother me.
I think one of the fears that people have with futures as well is that they're going to lose more money than they put into their account
if they're not disciplined.
They're not disciplined, but I also talking to a couple different brokers. A lot of them, you can set it up so like you can put a daily cap, where I don't want to lose more than $500 a day. If you're starting out, like a safety net, where you're like, it's going to liquidate you if you hit that point.
Well, but every trade that I do in my live room, I have stops in place because, I'm not bigger than the market. Yeah. And there have been times I'm not going to ever see or stand here and tell you that news came out and where, something affected the market where I got stopped out. Yeah. I can't control the news. I don't have the future before my eyes. But the bottom line is that anyone who says that, they're fearful of trading futures, they're overthinking it.
Yeah.
That's how I look at it. And I try to get people out of that mindset.
Thinking about futures clearly as just, like you said, equities in terms of if I'm trading Apple, if I'm trading the E-minis, it's all going side by side. And then understanding the risk. Obviously, there's risk with every instrument. There's risk if you go and you get 100 contracts, there's going to be risk. But when you're first starting out, starting out with one contract, getting $12.50 per tick, having a goal of making $100 a day with one contract a day, trading in and out and having patience, understanding the risk reward. I think at the end of the day, futures is a much better vehicle for beginners because you can really just focus on the E-minis instead of trying to every day wake up and go, okay, what stock am I going to trade today?
Right.
And having a million stocks to look at and not having an idea. And then you also can be blindsided because you're like, I'm going to buy this stock. And then all of a sudden that stock, you didn't know that the stock also had some kind of weird news coming out and they go bankrupt. And you're like, well, with the overall market, there's obviously going to be volatility, but there's also going to be, more consistency in.
But anybody who starts out trading futures should never jump in my opinion, with real money. What you do is you open up an account, you set up a simulator, right? You start getting familiar with it, watching it. And once you start getting more comfortable and, you come into my live room, you hear the calls, you start following the information, the trends, the trade ideas that I'm putting out there. There's a whole different lingo to it. a handle. Like, what's a handle? So, for example, so if the S&P futures go from 94 to 95, that's one handle. A lot of people don't even know what that means. So there's a learning curve to it. But anybody who's starting out, they should just basically just, open up an account, start with a simulator, start learning, and then go from there. Rome wasn't built in a day, right? So exactly. Bottom line is, when I met you many months ago, and you never even knew what a future was like, and I started telling you, let's do trade futures. I did a couple go-to meetings with you, and now you trade futures every day.
I think, I don't know, really, I don't know if I was scared. I definitely wasn't scared. I just didn't know. I just never did. Fair. So I think that was really what it comes down to. I had the idea that there obviously was a matrix. There was a ladder bracket. I just go the same way that if I'm trading Apple, I go on there, I could buy one contract and sell. Bam, bam.
But that says a lot. That says a lot that, that you admitted that you were unsure. You were, scared because you didn't know.
Yeah.
So the unknown is always out there, right? But you take a step back and you want to learn, right? And that's what I do. I teach all day long. When I'm slow, I'm teaching all day long. When there's no patterns, no setups, in the market. Today there was a lull. I was bringing up different charts on different instruments, explaining people why this happened, why I called this, why look at the move that had happened. Tesla, I got a buy signal, right? And then it ran to new highs. It ran almost $9 or $8 since the time I called the buy signal this morning. So why did that happen? But it doesn't make a difference if you're trading Tesla, if you're trading Apple, if you're trading NASDAQ futures, oil, gold, euro dollar. It's the same thing. If you buy something, you're waiting for the right setup, the right pattern. And if you're confident based upon the right tools that I'm providing with my 36 years of experience, plus the technology, that's what I offer. And it should not make a difference if you're trading futures. It's a mindset, it's just get over it. To me, it's just really another vehicle.
No, I get it. I think just as a lot of people, when they first get into trading, you just kind of think, you overcomplicate things. You think futures, like you got to go and you got to sign a contract.
So I'm gonna give you a great story.
Yeah.
So when I was growing up, right, I wanted a motorcycle. So everybody's like, oh, start with a Kawasaki, start with a Honda. I'm like, screw that, I'm going for a Harley, right? It was like, well, that's a big bike, you never rode before. I said, screw, I'm going for the Gusto. That's it, right? I bought a custom Softail. So it doesn't make a difference. So, the bottom line is that, learn with an instrument that has good movement, and you can learn, and you become a good S&P trader. You can really hold your head up high.
I'm excited.
Or any futures trader.
I'm excited to start buying 100 contracts at a time. Start making thousands of dollars. There it is. Learning more about futures. Make sure you guys hit that subscribe button. Tune in. Check out tickertalker.com. See what Steve's doing over there. There's a link down below in the description. And I will talk to you guys later on.
The Ticker Talker app brings the powerful trading technology tools of the Ticker Talker desktop platform into the hands of its users who are on the go. Ticker Talker connects novice and advanced traders with industry leaders who are providing real-time trading content throughout market hours every single day. The Ticker Talker app allows traders to follow and get real-time push notifications of trading leaders' trade ideas, all while on the go. Ticker Talker leaders host interactive live trading rooms which provide all-day coverage of their trading ideas and methods seamlessly with social chat for real-time feedback from the expert community of Ticker Talker's powerful user base. Set up and/or subscribe to automated trading strategies to mimic the decisions made by trusted professionals automatically. Powering up your trading AI has never been this easy. We focus on intuitive trading efficiency so you can focus on what matters most in your life. The world's most powerful trading technology is now in the palm of your hands.
Top of the morning to you.
Who's this? Ben Arnold.
Pip.
Pip?
By the British pound.
By the British pound?
Oh, by Jove.
What is happening?
Avoid those traders with a trusted Ticker Talker trading leader today.